Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me for the weekly markets review from the mid is Chris Dearborn. He's managing director of Nasdaq's Markets Intelligence Desk. Chris, thank you very much, as always, for joining me on Friday. For the traders who are actually still on the desk.
Is anybody around?
I know. I mean, the city's relatively empty, particularly on the trading desks. But let's talk about market movement this week. It seems to be trade and geopolitical headlines really were the focus.
It really has been. The markets have been kind of lighter on volume as we normally see coming into these three-day weekends. You know, the average tape for the year has been averaging over 7 million, mostly because of the high volatility surrounding the February move in the markets where we sold off significantly. And since then, we've crept back to that normalized 6.2, 6.3 billion shares. I like to see it about 6.6. That's a good average. We're not even going to get close to 6.2 billion. Let's say we're at one of the lightest volume trading week of the year. And I expect next week to be more of the same. So what you're seeing is kind of like we'll call it a passive move north. You take out the macro political headlines and the markets are still taking baby steps. What happened with North Korea and what happened with the commentary from the White House there sent the markets into a little bit of a tizzy midweek. But with the president coming out this morning and saying, you know, talks are back on and we're looking for a new date, we want to get this done, the markets have started to normalize and pick themselves back up. So again, macro headlines dominate the movement away from the economic and stock-specific items.
Well, another big topic this week was data and security with GDPR going into effect today in Europe. It's also going to have an impact for companies in the U.S. that do business with Europe. And to be quite honest with you, your major companies are all global at this point.
Absolutely are. You know, again, more headline news that's actually going to be good for the consumer. You know, you have concerns with items, especially about what they're doing with the data privacy, the privacy level of your data. Who's buying that? Who's selling it? What's being used for? More is better. More regulation is better. And I think with that, you're going to see more transparency. How that translates to future earnings on companies, which is going to be a wait and see. And for those who violate that, you know, it could be 4% of your revenue based in the country. That could be significant for some of these companies. So it's going to be a wait and see. The top line on the news looks very good. We'll see how that translates to future earnings.
I think it's going to be interesting to watch companies that are really data dependent, how it's going to impact their user experience, how it's going to impact ad sales, of course. And then there's also going to be regulatory expenses associated around GDPR as well. I think it'll take a couple of quarters to see how that translates. But let's focus on the now with the trading week ahead. Going to be a relatively quiet week. Markets are closed on Monday in observance of Memorial Day. We also have the quarter end on Thursday with on May 31st. But we have some important data coming out, particularly the key employment report on Friday, June 1st. We have a number of manufacturing data and, of course, retail earnings. I like watching retail because that's a space of you either have it or you don't.
Absolutely. So we're coming in, we're finishing up in this week and next week really into the key factors of the tail end of earnings season. Retail generally picks up towards the end of the earnings cycle. We've had some large companies come out this week and with mixed bags of results, whether it's Foot Locker and Tiffany's to Ross Stores. What you're looking at is companies that are in focus for trading, really kind of people looking to capture that alpha off of their past report and what they're saying going forward, what the guidance is. And we have a continuation of that next week. You have Dollar Tree, you have Costco, you have HPQ, even though it's not, you know, retail still on the consumer side. And so you've still got some pretty large companies that can make an impact into their specific sectors that can influence the movement of those stocks within those days. And then going to the economic data, you know, you have non-farm payroll on Friday, which is June 1st. Here we are, June already, which could be very significant, but you also got the first revision of GDP for Q1, which is going to be huge. So remember, retail sales, consumer spend figures prominently into GDP. It's 2/3 of that here in this country. And you want to see that consumer spend go into it. You want to see that GDP number tick up. And what you're seeing here with the earnings, especially on the retail side of things, the consumer spend side, is that it's there, but it's selectively there.
Oh, yeah, definitely.
Yeah.
Well, to wrap up, we had some rollbacks with Dodd-Frank this week. The Fed's actually going to meet next Wednesday to see how it's going to modify the Volcker rule. Now, this is important for the financial industry because the rule here is what prohibited prop trading on the big banks and desks, hence why a lot of them went from being a trading firm to now a bank.
Correct. So that could breathe some significant life into the trading desk that we haven't seen on a human level in a decade.
Yep.
And with that, you're going to see, if it does happen, and it's a mixed bag if it does or doesn't, but if it does happen, you're looking at trading desks ramping up again on a lot of the different companies that shut them down or even rolled out. You know, I'm not going to talk specifics, but some of the larger guys converted to a bank in order to stay in business, where, you know, they had to make a choice. Now they can do both. The prop desks are a significant way to create revenue, to generate profits for the company, but it's also a risky venture if you're using client money.
Yep, I'm really curious to see how it's going to impact liquidity in the markets and also what it does for trading volumes.
Yes.
And as we were saying, have been incredibly anemic. And I would say that not having the prop desk liquidity or volume there is a contributing factor to that. So that'll be something for us to watch for sure.
Absolutely.
Thank you very much for joining me,
Thank you, Jill.
as always. And thank you, traders, for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.